Hi everyone, this is Khushboo Chokshi and today we'll be discussing about FEMA for CA inter-examinations. The history of FEMA is basically that it was earlier FERA, and then after the liberalization policy came in 1999, FEMA came into place. FERA is a much stricter act as compared to your FEMA, and FEMA is much more liberal. Uh, Basically people who manage the control of the transactions that happen in FEMA is your RBI and central government, and some of the powers are given to Directorate of Enforcement. What does FEMA exactly do? It manages the flow of currency from India to outside India and from outside India to India. So how the movement of the currency happens between countries and between with India and with other countries is what they will manage. So anything that impacts the flow of foreign currency, whether in India or flow of currency from India to outside India, is something that is managed by your FEMA. It is being divided into different sections that we will study as a part of the curriculum. The preamble, like we see in the General Clauses Act, is basically stating that it is an act to consolidate and amend the law relating to foreign exchange with the objective of facilitating external trades and payments and promoting orderly development of the foreign exchange market. So this is basically a preamble which you study in your General Clauses Act. It's basically something which defines the scope, object and purpose of the act. It is an aid to interpretation, but it will not override the plain provisions of the act. Then there are certain definitions which we will go through. One of them is authorized person. Who is the authorized person? So basically anyone who is dealing in foreign currency. So if I want to go travel abroad and if I want to take foreign currency, or someone who's coming to India and needs currency, in these cases what happens is that you have an authorized person. So this flow of transaction has to happen through the authorized person only. These authorized persons are registered with RBI, so RBI is aware of what transactions are happening and how the foreign currency is flowing between the two countries. So here, who is the authorized person? So basically when you go to a money changer, when you want to travel abroad and you get your US dollars or euros, that is the person who is the authorized dealer. You can't just get it from any one of them. You have to go through the authorized dealer only. So authorized dealer, money changer, offshore banking unit, banks which deal only in foreign currency, any other person for the time being enforced. So any person who is authorized to deal in foreign exchange is an authorized person, and you can take currency and give currency and transact only through the authorized person. You can't directly give money. Again, we'll study that in more detail in the particular chapter. Who is a person? Individual, HUF, company, firm, AOP, BOI, every artificial judicial person. So this is a definition of a person which you will study everywhere. What's different in FEMA is that here you have agency, office or branch owned or controlled by such person. So if you have a branch or agency, office which is controlled by such person, then that is also included in the definition of person. Very, very peculiar to FEMA. Then you have your foreign exchange and you have your foreign security. You can go through that. Person resident outside India is basically a person who is not resident in India. Very simple definition if you see. But what is the definition of person who is resident in India? This is very, very important for your examination about who is a person resident in India and person resident outside India. What I have done here is that after everything I have given certain examples. I'll be sharing the notes on the Telegram channel, so you can take these notes from there. And here I have given certain examples which will help you further clear your concept. For every concept that is there, I have added examples which will help you understand whether the concept is clear or not. Basically clarify everything pertaining to that concept. Okay, so here you have a simple chart which will help you remember. This is given by the institute itself. It's a simple chart which will help you remember what is a person resident in India. So first you have to see whether he is resident in India for more than 182 days or less than 182 days. Before we get into more than and less than 182 days, what you study in income tax is different from what you are studying in FEMA. in income tax you see the status as per the previous year and then you determine the status for a year. But here in FEMA it's not like that, it's different as compared to Income Tax Act, and here you will see the status at a particular point of time. So it is possible that in a year a person may be person resident in India also and person resident outside India also, which will not happen in your income tax. So it is different from your Income Tax Act. The same logic will not apply here. So here I have to see if it is he is resident in India for more than 182 days. If he is resident in India for more than 182 days, then he is a person who is resident in India. Now when we do the LLP Act, it talks about 120 days. When we talk about OPC, it also talks about 120 days. But for FEMA, it is 182 days. So here, if he is in India for more than 182 days, yes. Then, did he go out or stay outside during the current year? If he has not gone outside, if I am studying for my CA Inter and I have not stepped outside of my country, then in that case it is very clear that I am a person resident in India, because all 365 days I was here studying for my CA Inter exam. So I am a person resident in India. Now, if I go out for any of the three purposes, what are the three purposes? If I go out for business, employment, or for an uncertain period. Okay, if I go out for any of these three purposes outside of India, then I will be considered to be a person who is resident outside of India. If not, then I am a person resident in India because I have stayed in India for a period of more than 182 days. So here, how will you see? Come. We will just see how it helps you. So here I am a CA student studying for my CA Inter and no travel abroad in the current year. So here I have stayed in India for more than 182 days in the previous year. In the current year also I have not traveled anywhere because I was studying. Then I will be a person resident in India. I have stayed here for more than 182 days, and after my exams were over, after I got my results, I was very happy and I go to USA for a vacation. Here in this case, I am going outside of India. Yes, but am I going outside of India for any of the three purposes? Am I going for business, employment, or for an uncertain period? No, I am going on a vacation. I have my visa. I am traveling for a fixed period of time. I am not going there for business. I am not going there for employment, and hence my status will be person resident in India. Now, I have stayed, third example, for more than 182 days in India, and then I am going to US for education. I say that I want to go outside to some university for some education. In this case, again, am I going for the three purposes which are there? Business? No. Employment? No. For an uncertain period? No, because my course is for 2 years. So after 2 years, I am going to come back. So ideally, I should be a person resident in India. But this is an exception. What it says is that there is a RBI circular which is saying that a student will be considered to be a PROI, since usually students start working there to take care of their stay or cost and the cost of studies. So what happens is that when a student is going outside for education, it's very difficult to live outside considering the expenses. So he is going to stay there, he is going to take up some work there, and he will start working there. So the RBI circular has clarified that if you're going outside India, see, one is that if you're going outside India for three purposes. What are the three purposes? Business, education, and uncertain period. Then it is of course PROI. But it is clarified by way of circular that if you're going outside India for the purpose of education, then you will not be considered to be a person resident in India. You will be considered to be a person resident outside India, even though you have stayed in India for more than 182 days in the previous year. It doesn't matter, because you're going outside India for education. As per the circular, you will be considered to be a person resident outside India. So this is a different example. Okay, now if I am in India for more than 182 days in the previous year, in the current year I am going there for employment, then in that case I will be person resident outside India, because one of the three purposes that we discussed. Again, more than 182 days going for medical treatment for an uncertain period. People go outside India to take medical treatment, and the medical treatment, you're not certain as to how long you're going to be there and how long the treatment would take, and hence in this case you will become a person resident outside of India. Okay, now your parents decide that since you are in US, we will also go to US. They've stayed in India for more than 182 days and now they are traveling to US to meet you. They are coming there to meet you, make good food for you. Then in that case, he will be a person resident in India. If they've stayed in India for more than 182 days and they're going to USA to meet the son plus for a medical treatment, then since medical treatment is for an uncertain period, it will become person resident of outside of India. Okay, so you will have to see as per the chart whether you are going out for the three purposes, plus we will add your education. If you are going out for these four reasons, then in that case you will be considered to be person resident outside of India. Otherwise you will be considered resident in India because you have stayed in India for more than 182 days in the previous year. Clear? Now, if you have not stayed in India for more than 182 days in the previous year, did he come to or stay in India during the current year? So you have not stayed in India. Foreigner has not stayed in India for 182 days. He is staying in foreign, wherever. Now he has come to India to stay in India during the current year. If he has not come to India, first situation, if he has not come to India, he is staying in US. Okay, and my cousin, he's staying in US and he continues to stay in US. He's not coming to India at all. He said, I don't like too much smoke, too much pollution, all of that. He said, I'm not coming here. Then in that case, he will obviously be a person resident outside India because he has not put his foot in India, so he can't be called as a person resident in India. Now, suppose he is there and he comes here. He comes here to say meet his mother. Then in that case, will he be a person resident outside India or in India? Then we have to say in the previous year, whether he has stayed in India for more than 182 days? No. So here he is coming just to meet his mother. So he will be a person resident outside India because in the previous year, he has stayed outside India for more than 182 days. But if he is coming in India for the three purposes, what are the three purposes we have? We have business, employment and uncertain period. If he is coming for any of these three purposes that we have, then he will be considered to be a person resident in India. Otherwise, he will be considered to be a person resident outside of India because he has stayed outside of India in the previous year for more than 182 days. Is that clear? So this is how you will check. So now coming to our chart, if we say that a person who is outside of India is coming to India for 1 month or for 3 months to see the Taj Mahal, then he will be called as the person resident outside of India. But if he visits India because he is appointed as the CEO in India, so he has taken up employment in India, then in that case he will be considered to be a person resident in India. If he is coming here for pursuing education, if he says that Indian universities are better, let me come to India and pursue education, he will be considered to be person resident outside India since in the previous year he has stayed outside of India for more than 182 days. The RBI circular that we talk about is talking about students who are in India who are going outside India. It's not talking of the other way around. So only students in India who are going outside India will be considered to be PROI, but people who are outside India coming to India for education, then we will only see three purposes. We will not see the fourth purpose here. So here we will only see three purpose. What three purpose? Business, employment and uncertain period. Okay, we will not see education. Education not to be considered. Okay, so that is something that we will not consider. Is this very, very clear? Person resident outside India, person resident in India. This we are talking only about individuals. Okay, we are not talking about other than individuals for the time being. Now, we have a few examples here. I'll quickly go through them. You can read it at leisure once you get the notes. If a person comes to India on 1st of June for visiting his parents, however, his parents fall sick and he stays till 31st March 2022, he will leave India in the next 6 months, whether he'll be considered to be a person resident outside India or person resident in India. In the previous year, he has stayed outside of India for more than 182 days. Yes. Has he come to India for any of the three purposes? No. Then he will be considered to be a person resident outside of India. So you have to keep this chart in mind and you will be able to answer any of the questions. Okay. Then second example is that Mr. X has resided in India during the financial year 1920 for less than 182 days. He has come to India on 1st April for carrying on business. So he is outside of India for more than 182 days. Now he has come to India for carrying on business. So he has come to India previous year more than 182 days? No. But he has come to India for any of the three purposes. Then he will be considered to be a person resident in India. He intends to leave the business on April 30 and leave India on June 30, 2021. So he has come for a certain period. He intends to leave, but has he actually left? No. So he will be considered to be a person resident in India. Then Mr. Z had resided in India during the financial year 1920. He left India for US for pursuing higher studies for 3 years. So in this case, because he is going for education outside India, as per the RBI circular, he will be considered to be a person resident outside of India. So we will quote the RBI circular and state that this is usually because students start working there to take care of their stay and cost of studies. Now, this is a different kind of example which we will mark as LDR for last day revision. It is saying that Miss Alia is an air hostess. Please read it carefully. With the British Airways, she flies for 12 days in a month and thereafter takes a break for 18 days. During the break, she is accommodated in a base which is normally the city where the airline is headquartered. However, for security consideration, she was based at Mumbai. During the financial year, she was accommodated at Mumbai for more than 182 days. What would be her residential status? So here she has to fly for 12 days, stay wherever the headquarters are for 18 days because they can't be on, because of health reasons also, they can't be flying for all the 30 days. So they have to be on land and have to fly for certain number of days. Now when they are coming, when she's in for 18 days, when she has to stay at the headquarters, so when every time she's flying 18 days, she'll be here 12 days in the flight, 18 days, 12 days, 18 days, 12 days, and end of the year when they calculated, they saw that she has been in India for more than 182 days. So in such a case, what will be her residential status? Please read because this is something different. So let's read it first. Miss Alia stayed in India as a base for more than 182 days in the preceding financial year. She is, however, employed in UK. She's not come here for employment. She's come because it's a mandatory thing to stay on land for some time. She's not to come to India for employment, business or circumstances which indicate stay for uncertain period. Under section 25B, such persons are not considered as Indian residents even if the stay exceeds 182 days. Thus, Miss Alia may have stayed in India for more than 182 days. She cannot be considered as a person resident in India. It is not out of choice that she is staying here, but because the guidelines are such that she has to be on flight 12 days, on land 18 days, and because of that she has become she has stayed in India for more than 182 days. Only because she has stayed in India for more than 182 days, she will not be considered to be a person who is resident in India. She will still be considered to be a person resident outside of India. But had she taken up employment, she said, I am going to be on land for 18 days. Every 18 days I am going to come here, correct? Every 12 days I will come here for 18 days. So she said, why not take up employment in India, so that while I am on land, I am going to also start working, earn some more money. So if she takes up employment in India, then in that case she will be considered to be a person resident in India. So read here what's written. If however she has been employed in Mumbai branch of British Airways, then she will be considered to be a person resident in India. I hope this is clear. It's important. It can be asked in the examination. Now, Printex Computer is a Singapore-based company having several businesses units all over the world. It has a unit for manufacturing computer printers with its headquarters in Pune. It has a branch in Dubai which is controlled. Okay, so we will keep this on hold because we have only studied about individuals. We have not yet come to companies or other things. So next one, Suresh resided in India for the financial year 2021. He left India on 15 July for pursuing higher studies in biotechnology for 2 years. So as per RBI circular, going outside of India for pursuing education, so he will be considered to be person resident outside of India. Okay. There's one more. Molly has resided in India for 182 days in financial year 17-18. So 17-18 stayed in India more than 182 days, for 182 days, not more. Yes. Then she went to UK on 1st April 18 and returned to India on 1st July 19 for an employment contract in India for a year. She completed her contract immediately and left India. Determine the residential status of Molly for the financial year 18-19 and 19-20. So 18-19 she has come to India. She has stayed in India for more than 182 days. Then here she has gone outside of India for taking up an employment contract outside of India. So from 1st July 2019 she will be considered to be a person resident outside of India. And for 19-20 you will have to calculate for 18-19 she has stayed in India for 182 days and not more than 182 days. So she will be considered to be a person resident outside of India. If she had stayed for more than 182 days, the language is more than 182 days. So if she has stayed in India only for 182 days, and hence that is something which will be considered to be a person resident outside of India. So this is about individuals, correct? So individuals, we have to see first whether you have stayed in India for 182 days or not. If you have stayed in India for 182 days and now you are going outside India, are you going for the three purposes which are there? Yes, then you are a person resident outside India, plus education, then personal resident outside India. But if you are going out for any other leisurely trip, then in that case, other than the three purposes which are there, then in that case you will be considered to be a person resident in India. Similarly, if you have not stayed in India for 182 days, if you are a foreigner, then in that case you are coming to India. I will check whether you are coming for three purposes. Yes, then you are a person resident in India. If no, then you are still a person resident outside India. If a foreigner is coming to India for education, then in that case he will still be a person resident outside of India, because the RBI circular does not talk about people from outside India coming to India for education. It only talks about people in India going outside India for education. Okay. So I hope this is clear. This is only for individuals we are talking about. Person resident in India for individuals. Now coming to other than individuals. What about other than individuals? Okay. So if you are a person resident, a person or body corporate, which is registered or incorporated in India. If you are registered or incorporated in India itself, then in that case you are, of course, a person resident in India. If you are an office, branch or agency, then if you are outside India but owned or controlled by people in India, then you are a person resident in India. Or if you are in India but owned or controlled by person resident outside of India, still you are considered to be a person resident in India. So what does it mean? Say for example, I am a branch in Mumbai and I am managed by people who are based in USA. Then I will be person resident in India. Correct? This is obvious because I am in Mumbai only. So I am a person resident in India, even though people outside of India are controlling. No problem. Second, it is saying that I am a branch in, say, Dubai. Okay. I am a branch in Dubai and this is controlled by individuals who are based in India. Then this branch will be considered to be person resident in India, because I am sitting here outside India, owned or controlled by person resident in India. So today if I have an office in Dubai and I'm managing everything there, it is controlled by a person who's resident in India, because I have not gone outside India for more than 182 days or for 3 purposes. So I'm a person resident in India, I am controlling my Dubai office. Then in that case, what will happen is that the Dubai office will be considered to be a person resident in India. So in case of other than your what do you call individuals, anything which is registered or incorporated in India is a person resident in India. Anything which is in India, which is owned or controlled by person resident outside India, still will be considered person resident in India. And anything which is outside of India but controlled by person resident in India, then that will also be considered to be a person resident in India. Okay, so this is for other than individuals. Now we read the example. Printex is a Singapore based company. So the company is in Singapore. Okay, so Printex is Singapore. Okay, now it has a unit for manufacturing computer printers with headquarters in Pune. So Pune, it has its headquarters. It has a branch in Dubai, also has a branch in Dubai, which is controlled by the headquarters in Pune. So this controls this. Now what is the status of this and this? So Pune headquarters is registered, incorporated in India only. It may be controlled by Singapore company, but any company which is in India controlled by person resident outside of India, again it will still be considered to be a PR, person resident in India. Now it is saying that the Dubai branch is in Dubai, incorporated in Dubai, but it is controlled by headquarters in Pune. So a company outside India controlled by person resident in India will become a person resident in India. Are we clear on that? So it gives you the example for your other than individuals. So if you want, you can write down other than individuals as last day revision purpose. You can actually use these notes for the purpose of your revision, and it will be really helpful because everything has been consolidated. And also these questions that we are doing are because FEMA was earlier a part of CA final, so we have taken the questions which were asked there, which are relevant for your portion now. Also includes your MTP RTP questions which have been added later on for your inter. So it includes all of that, and it is like a very crisp and precise note for best for your last day revision. Okay, so you can use this on for your last day revision. Now coming to, so this was person resident in India, person resident outside of India. I hope it is very, very clear to you now. Now coming to dealing in foreign exchange and regulation management of foreign exchange, we will do both of them together. What is it saying? That if you are a person who is resident or not resident, any person basically, then in that case no person shall deal in or transfer any foreign exchange, make payment to the credit of person resident outside India in any manner, or receive otherwise than through authorized person or on behalf of person resident outside India in any manner. So you cannot transfer, you cannot receive any foreign exchange, or you cannot give any foreign exchange, or you cannot make payment of behalf of any person who is outside of India otherwise than through an authorized person. So anything that you do has to be through the authorized person. Who is the authorized person? We know he is authorized dealer, foreign offshore banking unit, money changer, or any other person who is authorized. These are your authorized person which we studied in the start, correct? So you can do all of these only through the authorized person. No, except as provided under the Act, no person resident in India shall acquire, hold, own, possess or transfer any foreign exchange, foreign security or immovable property situated outside India. You can do all of this, correct? Now I may own foreign currency. How? If I have to travel abroad, I will go to a money changer, I'll tell him that I'll give you Indian rupees, you give me US dollars, I have to go to US for a trip. So here I can take. So he's saying except as provided under the act. As provided under the act, you can take money, you can buy property outside India, all of that we will study. But you can do it only as mentioned in the act. You cannot do anything which is not provided for in the act, is what the section is saying. Now coming to these three clauses, let's study them in detail. He's saying that no person shall deal in or transfer any foreign exchange of foreign security to any person not being an authorized person. So I have simplified this and I have put a few transactions here which you can study. So Mr. X is my friend. He is going to Thailand for a visit. And when he comes back, he has taken USD from an authorized person, and when he comes back, he has foreign currency with him. So he has some 150 US dollars which is left with him. Now I want to go to Thailand. So he tells me that you're going to Thailand. I said, yeah, I'm just going to get to the money changer to get some foreign currency. He said, no, don't take that. What you do is you take my $150 that I have, you give me cash in return, and then balance you can take from the authorized person. He's saying this is not permitted. Why is it not permitted? Because my friend Mr. X here, no matter how good his intentions are, he is not an authorized person, and since he is not an authorized person, I cannot take money from him. Okay, so this transaction is not permitted. Second, let's go here first. Saying make payment to or for the credit of any person resident outside India. So for the benefit of a person resident outside India, I am making payment in India. I will explain how. And receive otherwise than through authorized person payment by order on behalf of any person resident outside India. For both these, I have a few examples here. So now what happens is that my brother, he is in USA. Okay, so J is in USA, I am in India. Now what I want is, my brother has to collect certain money from Mr. M who is based in India. Okay, so normally, ideally, as per FEMA, what should be the transaction? That M will go to the authorized person and the authorized person will make the payment to J, and that is how my brother will receive the money. But my brother said, no, let's not do all of this authorized person, it will involve documentation, so let's not do this. What you can do is that you can pay my sister who is based in India. So here M is paying money to me on behalf of J for the credit of Mr. J. This transaction is not permitted because we study here receive otherwise through an authorized person any payment on behalf of a person resident outside India. This is not permitted. So if Mr. M has to pay, he has to directly pay to my brother through the authorized person. He cannot pay me because J is based outside of India. Then another situation, no other situation, that is something else we will talk about. Or make payment to or for the credit of any person resident outside of India. So for example, we will take a new example for which I don't have space. So what I will do is that, say for example, J is based in USA, I am based in India. Correct? Now J has taken an insurance policy with LIC. And J has to make the payment to the LIC for the policy that he has taken. He tells me that you pay this money to LIC. I said, but I need money. I will pay on your behalf, then I will not have that 1 lakh rupees. So what he says is that dad will give you 1 lakh rupees on my behalf. Correct? So here this transaction, what is it saying? make any payment to for the credit of any person resident outside India. I am making it for the benefit of who? The person resident outside of India. Am I doing it through authorized person? No, because I am based in India. I don't need a authorized person. If he has to pay from them, he needs authorized person. I don't need a authorized person because I am based in India itself, and hence this transaction is something which is not permitted. Are we getting it? So this is something which is not permitted. There are some examples which I have put down here which you can go through. Now we have again very important part of this chapter is about your capital account transactions and current account transactions. Now, what are capital and what are current account transactions? Capital account transactions are defined as transaction which alters the assets or liabilities, including contingent liabilities, outside India of a person resident in India, or assets or liabilities in India of a person who is resident outside India. So, if any of my assets and liabilities which are there in Dubai are changed, are altered because of my action, then in that case it's a capital account transaction. Or my brother who's in USA and he has some asset liability here which is altered because of his action, then again it's a capital account transaction, because capital account transaction will include your balance sheet items. So it talks about your assets and liabilities, it includes your contingent liabilities, again something we'll do in more detail. And current account transaction are your revenue items. So basically any transactions which payments due in connection with foreign trade, other current business services, short-term banking and credit facilities, payments due as interest on loan, net income from investments, remittance for living expense of parents, spouse, children residing abroad, expenses in connection with foreign travel, education, medical care of parents, spouse and children residing abroad. All of this we will do in detail one by one. So now again we will come here for that. This simple chart will help you understand. So I am based in India, correct, and I import a machinery from UK, okay, and I import the machinery from UK and now I have the machinery in India, okay. So whether it's a capital or a current account transaction, okay, here I have written current account transaction, but you will say, ma'am, it will be capital account transaction because you are creating an asset. Absolutely, there is a machinery I am getting, it's a asset, it's a balance sheet item, it should be a capital account transaction. But what is the definition of capital account transaction telling you? It is saying that if a person resident in India alters the assets or liabilities outside India. So if my assets and liabilities get altered outside of India, then it's a capital account transaction, because foreign currency is involved between two countries. If I am in India, I am importing a machinery and I am sitting only in India, my asset is changing only in India, I am making him the payment through authorized person, no problem, but my asset liability is in India only. So it will be considered to be a current account transaction, not a capital account transaction. In this same example, not there in the same example, say for example, if I am here in India and I buy a machinery in UK, so my machinery is in UK and I am making payment for that, then I am a person resident in India altering a asset outside of India, then this will be considered to be a capital account transaction, because my machinery has gone outside. If it is in India itself, then it will be considered to be a current account transaction. So you have to see, if a person in India alters asset liability outside India, or a person who is outside India alters asset liability in India, then it is capital account transaction. But person in India buying something in India, not capital account transaction. Person resident in India importing something from outside India for the purpose of keeping the asset in India, not a capital account transaction. Clear? Now Now, second example, I am saying that I am importing machinery from UK, or say for example, okay, I'm not importing machinery. So, I am buying a machinery. Yeah, I am importing, sorry. I am importing a machinery from UK on a 3-month credit period. Now I am getting machinery from UK on a 3-month credit period, which means my liability is being created outside India, because I have taken like a short term advance for that asset which is in India, for which I will pay on credit for 3 months, correct? So in this case my liability is being created outside India, even though my asset is in India. Asset is in India, but liability is being created outside India. But still I am saying it's a current account transaction. Now what's the problem? Now here what happens is that it is coming for a 3-month credit period. If we read the definition of capital account and current account, it says in current account transaction we say short term banking and credit facilities. So it is a short term credit. Now what is short term, ma'am? How will we define short term? There is no definition that has been given for short term. But in the normal course of business, if I ask you short term, anything which is like less than 6 months or something, you will be considering it as short term. So your 3-month period is something which is short term, and hence it will be considered to be a current account transaction. But in the same example, if I had used 3 years instead of 3 months, then it would be a capital account transaction, because now it is not short term, it's a long term thing, and my liability is being created outside India, because I have to pay him outside India. Even though the asset is in India, I have to pay him outside India, and hence it will be considered to be a capital account transaction. Then another thing is, where another example, I am in India, my brother is coming from US, or he is not coming from US, forget about him, he is outside of India, and I gift him USD 1000 through bank account. So I give him 1000 USD outside of India. Here he is staying in US, he is earning in dollars, he is getting that 1000 rupees. So it is in the normal course of business, gift will be considered to be a current account transaction. But again there is a little bit of twist here. It is saying that if he is in India, when he comes to India, I tell him, take 10,000 rupees. This is my gift to you for coming here and getting gifts for me. So here 10,000 rupees for you in cash. So person resident outside India creating an asset in India, and hence it's a capital account transaction. Your person resident outside India creating asset outside India. This is similar to what we studied here. Correct? So person resident outside India creating asset there, then no problem, current account transaction. But person resident outside India creating an asset in India, then it will be considered to be a capital account transaction. Okay, so this is your capital account transaction, current account transaction. If you're paying any money outside of India for the purpose of, what do you call, living expenses for your spouse or parents or children residing outside India, then again it will be considered to be a current account transaction and not a capital account transaction. So there are certain examples which are given here, which we have already discussed by way of a little diagram. So that is something which is you can just go through that. Now coming to current account transactions, there are 3 schedules which are given, very important, because time and again this has been asked in your paper. So here you have schedule 1 transactions which are prohibited transactions, you cannot do these transactions. Then you have your schedule 2 transactions which require prior approval of the government, and then you have your schedule 3 which is discussing about individuals who can deal up to 2,50,000 USD. So that is something which we will study. Now what are the transactions which are your prohibited transactions? Prohibited transactions include your lottery winnings. So if you are in India, a foreigner comes to India, he wins a lottery, this money he cannot take outside India. Or if you go outside, if you win a lottery, you cannot get that money in India. Prohibited. So you have to use it there. So if he is winning a lottery here, I will tell him use it here only. Purchase of lottery tickets, banned or prescribed magazines, football pools and sweepstakes. So if I have to do any transaction for purchase of any of these, then that is something which is prohibited. Racing, riding, or any other hobby, if I am earning anything through any of these hobbies, then I have to use it in India. I cannot take it outside of India. Callback services, like when you have ordered something on Amazon, you call the customer support, you will see you get a call from a number which is outside of India, correct? So callback services, here what happens is that if you have earned anything by way of callback services, you have to use that money in India only. You cannot take it outside of India. Dividend balancing, again dividend balancing is not applicable currently. Basically it says that any company which is in India earning in Indian like whatever in foreign currency, then he can give outside India dividend only to the extent of the earnings in foreign currency, but this is no longer applicable now. Then commission on exports made towards equity investments in joint ventures or wholly owned subsidiaries abroad of Indian companies. So I am an Indian company, I have a wholly owned subsidiary outside India, and I make exports to that company outside India. It's a wholly owned subsidiary, it's my own company. So Act is saying you can't make any commission payment on these exports which you are making there, okay? Then commission on exports under rupee state credit route, except commission at 10% on invoice value on export of tea and tobacco. Here this tea and tobacco is important. So rupee state credit route was when there was a transaction with Russia where we were exporting to Russia, and the Russian government was encouraging their people to take whatever is being sent from India and like import, and for that the Russian government was giving them a discount of 15% on the exchange rate, plus it said that you have to make the payment by way of letter of credit. So Indian the exporters can claim that as a transaction only if it is showing that it's a credit transaction based on the credit letter of credit that has been given. So that was under the state rupee credit route, but that is something which is not there right now. It is done and dusted. Only thing that we have to remember here is that if any commission payment is made up to 10% on tea and tobacco, no problem. Anything above, prohibited. Then interest income on funds held in non-resident special rupee scheme account. So if there is a non-resident rupee account, so non-resident person who is outside of India holding a Indian rupee account in India, in that interest income that you earn, that you cannot take outside India, that you have to keep in India only, use in India only. So these are the transactions. So I've put it in a form of a table that will help you in revising it, but these are the questions that can be asked. So you want to see what are the questions that they will ask you. Remittance of US dollar 50,000 out of winnings of lottery ticket. So you have to say it is a prohibited transaction as per schedule 1. So I've given the questions here, you can go through them. Callback services, remittance towards hiring charges of transponders, lottery tickets. Yeah, so basically once we are done with all 3 charts, you can go through that, and these are the kind of questions. So they will ask you clear questions on these things. So they will mention any one point and then they will say that this transaction has happened, whether it is a permitted, prohibited transaction, and then you will have to write. So these are prohibited transactions. Now coming to transactions which require the approval of government. So you can do these transactions, but a prior approval of government is required. First is your cultural tours. So if you are doing any cultural tour outside India for promoting Bharatnatyam, Kathak, Kathakali, whatever, then in that case what will happen is that it will be permitted. You have to take approval and then you can do that cultural tour. Advertisement in foreign print media for the purpose of promotion, for other than promotion of tourism and foreign investments exceeding US dollar 10,000 by state government or a PSU. If a state government or PSU is doing any advertisement in foreign print media, if it is not for promoting tourism, then in that case, if it is more than $10,000, then approval of government is required. There are specific agencies who has to give this approval, which are not mentioned here. If you can't remember the agencies, you can just say prior approval of government is required, and that should be okay. If not, you can just refer to the module. The module has the name of the agencies given. If you can remember them, very nice, you can remember and write that down. Okay. Then you have freight on vessel chartered by a PSU, import through ocean, exports by government department or PSU. If you are doing anything through ocean, freight or freight on vessels, import through foreign. And there's one more, container detention charges. Correct. So if the container is detained, so whenever a container comes here, you have to pay certain money to get it. But if it is detained, if they have kept it on hold, they are not giving it to you, they say you have to pay a certain X rupees as penalty or whatever, then for that money that you pay for that container detention charges, approval of government is required. So all of three of them are basically coming under the ocean transport, the shipping department. Then you have multimodal transport for remittance to their agents, operators making remittance to their agent abroad. So when I'm getting it through one transport mode, then shipping, like how you have freight on vessels, ocean transport, it's through one department. Here when I'm doing multimodal, means I'm not using just one way, I'm using the flight, then from flight I will go by road, then I will take railway, then I will take the ship. So I'm using multimodal transport. Then in that case, for making remittance to the agents abroad, then again that will be considered under schedule 2. Hiring charges of transponders, container detention we have discussed. Prize money sponsorship for sports activity abroad exceeding 1 lakh USD. For any activity abroad, if you are taking more than 1 lakh USD, prior approval of government is required. But if it is from recognized sports body, your BCCI, giving any money more than $1 lakh, then they don't need approval of central government. Then for PNI club, it is protection and insurance club, which is there, which is basically of insurance where for shipping the insurance has been taken in a group kind of a thing. So that's a PNI club that they have. You just have to remember remittance for PNI club. So these things that are there here, the understanding of it may be technical, but you will have to remember. You don't have to explain anything to them, you just have to answer in yes or no. So you'll have to remember transponders, print media, cultural tour. In prohibited, you have to see lottery winnings, races, or other hobbies, or buying of banned magazines. So all of that pointers you will have to remember. At no point of time you are required to explain that what is transponders, what are container detention charge. That is not there. You just have to remember the bullets. I am just explaining them to you in brief so that it helps you in remembering it. Okay. Now coming to the schedule 3. Schedule 3, very very important. Here he is saying that if I am a person individual who is in India, and if I want to go outside India, then in that case, under the liberalized remittance scheme, it's called as LRS, individual, okay, we are talking about individuals, can take up to 2,50,000 USD. So if I'm going outside India for a trip, I can carry 2,50,000 USD without any approvals, freely. No one's going to question me why you are taking 2,50,000, because under LRS I am allowed to take that money outside India. For what purposes? Private visits to any country. Private visits to any country, again except Nepal, Bhutan. Nepal, Bhutan we consider they are a part of our country only. So when you are going to Nepal, Bhutan, you will not count like 2,50,000. You can take more for Nepal, Bhutan. See, I have added a question here also for that, which you can just go through. Okay, I can't seem to find it. Just a second. Yeah, this question, the first question, sorry, yeah, it's here. This question you can see, mark it as LDR because I won't be reading it now in class. But here you're going to Bhutan. So when you're going to Nepal, when you're going to Bhutan, the 2,50,000 limit doesn't apply. You can take more, that's okay. But other countries, if you're going US, Singapore, Dubai, anywhere, then you have to adhere to that 2,50,000 limit. Then for gift or donation outside India, going abroad for employment, maintenance of close relatives abroad. If I have an aunt there and she needs money, I can give her $2,50,000 without approval, no problem. Then travel for business or attending a conference or accompanying a patient going abroad for medical treatment. So if someone's going abroad for medical treatment, you are accompanying them, you can carry $250,000. Emigration. Emigration is you're going to settle there. Expenses in connection with a medical treatment abroad. You're going outside India for a medical treatment. Any other current account transaction. We're talking about current account transactions. Now, what is it saying is anything in excess requires approval of the Reserve Bank of India. So, for any of this, if I need more money, I'm going outside India for a vacation for a period of 4 months. I said $250,000. Say I will spend more because I stay only at 5-star hotels. So now here, if I'm going outside India, I want more than 250,000 USD. Then in that case, I will have to take the approval of the Reserve Bank of India. But if I am going outside India for immigration, medical treatment, or for the purpose of studying, just read it here, immigration, medical facility, or for the purpose of education, then in that case he is saying that if you are going outside of India for any of these three purposes, then in that case there is a possibility that you may need more than $250,000. So before, if I go there for a medical treatment, before I go there, I'm going to ask the medical the hospital where I'm going, and I'll ask them how much would be the approximate cost. If they say it is going to be 3 lakh USD, as an individual I can carry only 250,000 USD, but they've given a letter saying 3 lakh USD. If I have that letter, I can carry more than 250,000 USD without approval. Again, I can carry more than 250,000 without approval. So here he is saying that if you're going for immigration, when you're going to settle down there, you're going for a medical checkup, or you're going to university, if I have to go there and pay the university fees and I have to carry 4 lakh USD, I am allowed only 250,000, but I have a letter from the university which says that you have to pay 4 lakh as the fees, so I have to carry 4 lakh. So here, if I have the letter, I don't have to take any approval from RBI. I can carry 4 lakh USD. If at the airport someone stops me, I can just show the letter and they will allow me, because for that I don't need RBI approval. So medical treatment, immigration and education, for these three things, if I have a letter stating that this is going to be the approximate amount that I will need there, if it is more than 250, I can carry more than 250 without RBI approval. In all other cases, I will need RBI approval for taking any amount which is higher. Okay. Then there is a small thing here which says that person resident but not permanently resident can remit entire net salary. Person who is resident in India but he is not going to be permanently resident, he's come to India only to work for 2 years, after 2 years he is going to go back, then in that case he can remit entire salary because family is based there. So here 250,000 will not apply even though I am individual. Okay, so if a expat has come to India, after 2 years he has to go back, correct? People go, right? So if you're in Big Fours, people go from Mumbai to Singapore office for 2 years then come back. So similarly, if someone's outside India and he's come to India for 2 years and he said after 2 years he has to go back, then in that case entire net salary he can transfer even if it is more than 250,000 USD, provided if citizen of a foreign state excluding Pakistan, so Pakistan not covered here, citizen of India who is on deputation to the office or branch of a foreign company. So a person who is a citizen of India. Now today if I am employed by PwC Singapore, I go to PwC Singapore, I am working there, and then I come to India because they have sent me for some work here. Then in that case, whatever money I earn here, I can send it abroad to my family who is outside of India. So I don't have to restrict it to $250,000. Okay. So these two conditions. So this again can be asked as a case study question. If the transaction is not listed in any of the above three schedules, it can be freely undertaken. If something is not mentioned here, I can freely undertake that particular transaction. So these are your current account transactions for individuals which we have studied. So this is for individuals, sorry. This is for everyone. Schedule 1, Schedule 2, prohibited and approval of government. Now coming to transactions which are like similar to your LRS scheme, where purpose other than individuals, which requires prior approval of RBI. So $250,000 is only for individuals. Okay, so this is only for individuals, and it is for each individual, per individual. So if you, as a family of 4, if you are going for per individual, 250, 250, 250, 250. This will also include minors. If you have minors with you, that is also included here. Now this limit is per financial year. So for one financial year, this particular limit will apply. Next year again I travel abroad, again I can take $250,000, and this is not available for corporates and partnership firms, HUF, and consolidate for family members. Okay, and this is for people who can remit the entire amount, correct? So now coming to other than individuals, they will have to take RBI approval, which are the transactions, donations exceeding 1%. Now this may seem to be a lot to remember, but unfortunately if you see your Jan 25 paper, this is something which has been asked in the examination. So you have to go through these particular transactions. I have tried to put them in as much short form as possible for you to remember, but you will have to remember these. Donations exceeding 1% of the foreign exchange earnings during the previous 3 financial years, or USD 50 lakhs, whichever is less, sorry, for creation of chairs in a reputed educational institute, contribution to funds promoted by educational institutes, or contribution to a technical institution or body or association in the field of activity of the donor company. So if I am a company, if Tata is here and it is making any contribution, 1% of the foreign exchange earnings to a person, to a institution which is outside India, for creating their seat, to make their seat reservation. So you say no, that quota seats are there for schools, or trustee seats are there. So these are basically seats that you have created. So when I am donating any of these, then in that case there will be one seat for a person who is going from Tata in that particular university. So if I am making that contribution, then that will be considered to be, I'll need approval of RBI. Then remittances exceeding 5% commission per transaction to agents abroad for sale of residential flats or commercial plots in India. So say for example, my brother, I said, is in USA. He has a friend who is also in USA. Now my brother's friend is looking, okay, they're not friends, okay, we'll not keep friends. So Mr. M is looking for a flat in Mumbai. My brother has a flat in Mumbai, so he wants to sell it. Now he tells Mr. A, who is the agent, saying that, you know, I have a flat in Bombay which I am looking to sell. If you know anyone who wants to buy, then I would be happy to sell it. So now Mr. M wants the flat. So this agent who is there outside of India, he is also in USA, is selling a flat which is in India. Okay, and commission is being paid to him because he has sold the flat. Then exceeding USD 25,000 or 5% of the inward remittance, the price of the flat, whichever is more, will be require approval of RBI. Okay, here we will study that there is a resident foreign currency account and EFC account. So basically, person who are in India can have a foreign currency account. Okay, in that case, if you are making certain these payments from a resident foreign currency account or a EFC account. So I am in India, I am a resident, but I have a USD account in India which is approved by RBI, and then I am making payments from there for these particular purposes. Then in that case, it is okay if I don't take RBI approval, because I am making payment from a foreign currency account which is already being managed, monitored by RBI. So in this case, I will not need approval of RBI. But he is saying that for this particular transaction, even if it is made out of EFC account, you will still need approval of RBI. Okay, so for this flat, commission by agent outside India selling something in India, then you will need RBI approval. Then remittances, USD, just one second, 10 million for consultancy services pertaining to infrastructure projects and 1 million for other consultancy services procured from outside India. For infrastructure projects, if I am hiring a consultant outside India, then I can pay up to whatever limits are there. Anything in excess, I will need RBI approval. Again, if I am doing from EFC account, no approval is required. Remittances exceeding 5% of investments brought into India, USD 1 lakh, whichever is higher, by an entity in India by way of reimbursement of pre-incorporation expenses. Pre-incorporation expenses, if I am reimbursing it outside of India up to USD 1 lakh, no approval required, otherwise approval is required. Again, no approval required if payment made from RFC account or EFC account, but only for this commission payment and pre-incorporation expenses. Even if you are making it out of your EFC account or your RFC account, you will still require approval of RBI. The exception is not available in these two cases. Okay, so we have written it down there. It's not available for these two cases. For all other situations, if you are making from EFC or RFC account, then it is not required. Are we understanding? So this is all about your current account transactions, and the examples are there. Please go through them because these are the kind of questions that will be asked. Now coming to the last part of the chapter about your capital account transactions. Capital account transactions we discussed. If I am a person resident in India altering asset liability outside of India, or I am a person resident outside of India altering assets liability in India, then it will be called as a capital account transaction. No restrictions are placed for capital account transactions by the central government, by the RBI, and you have to comply with those restrictions which are placed. But there are no restrictions placed on amortization of loans or depreciation of direct investment. So if you have taken a loan and there is a schedule that has to be paid as per the schedule, then in that case you don't need any approvals, even though it's a capital account transaction. It's a long-term loan. So person resident in India hold, own, transfer or invest in foreign currency, security, immovable property situated outside of India if the same was acquired, held by him when he was a person resident outside of India. So my brother, he was in USA in 2023. In 2024 he has come back to India, but he has a house which is in USA. So this house he can continue to hold, or he has a bank account, or he has certain securities which he had got when he was in USA. He can continue to hold, he can earn income on this, he can sell this, he can transfer this, whatever he wants to do, he can do, because it was acquired when he was outside India, and it is outside India only, and he is doing the transaction outside India. This is as per FEMA, I am telling you. Tax is different. Okay. Now, so this he can hold, own, possess, transfer, whatever he wants to do, because there is no dealing that is happening between the two countries. Whatever he is doing, even though he is in India, everything is happening outside India only. So it is outside India, so FEMA will not come. If he is getting it in India, then yes, FEMA will come. But he is doing everything outside India, is holding it outside India, acquired outside India when he was outside India, no problem. Similarly, if an expat is coming to India, he buys a house in Bombay, then he goes abroad. He can continue to hold that property, he can transfer, he can earn money out of it, and it will absolutely not be a problem. Okay, so person resident outside India can do that. Then there are certain examples, please go through them. Like how we had schedule 1, 2, 3 for your current account transactions, schedule 1 for prohibited current accounts, schedule 2 for current account transactions which require approval of the central government, and third was your LRS. Similarly, for capital account transactions, you have permitted transactions for person resident in India, for person resident outside India. This is okay. They are similar. See, investments, foreign currency loans, then guarantees if they are given, Then immovable property outside India, contribution to capital firm, immovable property guarantee, export, holding import of currency notes, same again here, insurance policy from insurance company, loans and overdrafts. Then remittances, maintaining of foreign currency in India, foreign currency accounts in India, remittance for capital asset, remittance for capital asset, derivative contract, derivative contract. Here you have one change, which is a deposit and a contribution from capital of funds. So these are permissible transactions. Okay, you can remember them. They're both the same, only somewhat difference is there. What is prohibited capital account transaction is something which I will say is important. Okay, this is important. It is saying that you cannot do any transaction in excess of 2,50,000 USD, draw, sell any foreign exchange, because LRS is permitting only up to 2,50,000. For capital also you cannot use that 2,50,000 ka limit. For current also you cannot use, okay, except for three things: education, medical treatment abroad, and immigration, where if you have the authority letter you can go without approval, correct? Then it is saying that a person resident outside India cannot make investments in chit fund, nidhi company, agricultural or plantation activities, real estate business or construction of farmhouse, and transferable development rights. Basically it is saying that a person resident outside of India cannot take any property in India. Like how China is trying to take some part of India dire dire every year. So they are trying to take some of our real estate. So here if they start acquiring everything in India, then soon it will be owned and everything by the foreign person only. So anything pertaining to property in India, transferable development rights, is where the government is giving you, telling you to transfer all the property in their name. So all of that also they can't do. So anything pertaining to real estate, nidhi company, and chit fund is prohibited transaction, and this is something which is very important, can be asked as a case study question. So this is your current account transaction, capital account transaction, person resident in India, person resident outside of India. It is very conceptual. It is not difficult, it is conceptual. You will have to remember a lot of things, but it is something which I'll say that is manageable. It is something that will come as a compulsory question, so something you can't skip even if you want to. And don't be scared of it. Go through the examples, do the examples, it will clear out everything for you, and then you can attempt some test papers or something on foreign exchange transactions, see some more examples, and you will be able to easily answer these questions. It is not as difficult as it may seem to you. Okay, I hope this video was useful to you. Thank you very much.